The coming week is expected to bring much influence on the forex markets as there will be meetings and monetary policy decisions from Federal Reserve System, Fed, Bank of England, BOE, Swiss National Bank, SNB, and Bank of Japan, BOJ. Last week, the much higher than expected inflation print was released on September 13, 2022, with the CPI month per month was 0.1%, higher than the expectation of -0.1% and higher than the previous CPI released in July, 0%. On September 14, 2022, the Bank of Japan, BOJ, conducted a rate check in apparent preparation for currency intervention as policymakers stepped up warnings about sharp falls in the yen. Besides, Finance Minister Shinichi Suzuki on September 15, 2022 said the government wouldn't rule out options including intervention in foreign exchange markets, a move seen as a precursor for intervention. Also on September 14, 2022, Minister Liz Truss's spokesman announced that the UK will set out how it plans to support businesses facing surging energy costs next week, adding that the measures would be backdated to October 1 if needed. Federal Reserve System, Fed, the market was favoring a 75 BP hike ahead of the August CPI report, but has seen the market price in a 20% chance that the Fed will go over and above that by opting for 100 BP. All eyes will be on the Federal Reserve meeting next Wednesday. A 75 BP hike is still our favored call, but we acknowledge the risk that with inflation proving to be stickier than we had suspected, the subsequent meetings in November and December could see more aggressive action from the Fed than we are currently penciling in. Due to the geopolitical backdrop, the China slowdown story, the potential for energy rationing in Europe, the strong dollar and fragile-looking domestic equity and housing markets argue for a more moderate path of tightening in the coming months. If inflation momentum doesn't slow, the bank will be expected to hike by a further 75 BP in November and possibly 50 BP in December. The market expects end 2022 Fed funds rate at 4.125% rather than 3.4%, July forecast, and suspects it will be kept at that for 2023, before dropping back to a long-term average rate of 2.5%. BOE, also on September 14, 2022, Minister Liz Truss's spokesman announced that the UK will set out how it plans to support businesses facing surging energy costs next week, adding that the measures would be backdated to October 1 if needed. This announcement will drastically lower near-term CPI, reducing concerns about consumer inflation expectations becoming de-anchored and reducing the urgency to act even more aggressively. However, the hawks will be worried about the recent independent sterling weakness and will also argue that the government support package could increase medium-term inflation given it reduces the risk of recession. For that reasons, 50 BP hike on Thursday, September 22, 2022, is expected, taking the bank rate of BOE to 2.25%, although 75 BP is still on the table of some hawking policymakers. BOJ, the yen rallied 0.4% against the dollar Friday as investors position ahead of the BOJ's September 22 policy decision. Traders were already concerned that the yen may rise after the finance ministry ramped up its rhetoric about potential intervention to stem a slide that saw the yen weaken toward 145 against the dollar earlier this week. SNB, the Swiss National Bank, SNB, meets next week and is ready to raise its key interest rate for a second time, after the 50 BP increase in June. The expected hike would be 75 BPS since inflation in Switzerland stood at 3.5% in August, still above the SNB's target of 0 to 2%, although well below the inflation rate in neighboring countries. The fact that the Swiss franc is relatively strong against the euro is no longer a problem for the SNB, as it reduces imported inflation. The SNB focuses much more on the real exchange rate, which takes into account the inflation differential and has remained very stable in recent months. With no fears of too much appreciation and with inflation above target, there is little reason for the SNB not to follow the lead of other central banks, especially as it only meets once every quarter, so the next meeting will be in December.